All right, today on Real Real Estate Deals, we have my new friend, Peter Yim. He's here in Southern California with me. And Peter is, even though he's a fairly new friend, he's already a special friend. I recently joined Case Morby's Sub 2 community, and Peter was one of the first people to reach out to me. He messaged me on Facebook and just gave me his phone number directly and said, "Hey, just call me or text me or just let's talk." And I had heard that Pace Morby's group was like that, and Peter was really a great example of that. And then when I called him, he spent more than an hour with me on the phone, just answering questions that I had about all kinds of things, and said he was happy to do it again. And I was like, wow, this really, really enjoyed the conversation. Anything that's productive and fun, I know that person's going to be special in my life. And Peter is that. He's both productive and fun to chat with. And I asked him if he'd come on here and talk about one of his deals, and he may even talk about more than that. But first of all, Peter, welcome. And it's great to have you with us. And I'd love to hear, I'm sure everyone listening to this would love to hear, how did you first get interested in real estate?
Yeah, well, thanks, Sonny, for interviewing me. It's a pleasure to be here. The real estate side, let's see. So real estate, like probably like millions of other people probably read the book called The Rich Dad Poor Dad by Robert Kiyosaki. And that's one of the books that inspired me a long time ago, but I never took actions. So that said, speed up like 15 years ahead, about 4 years ago from now. We're in 2023, by the way. So uh, my wife and I just decided to buy a turnkey property. Uh, what that means is there are uh, companies out there that provides investors with mostly single family homes for investors to invest for a single family. So what that means is also they coach you where to buy, uh, how to get financing, and also some companies have property management in place, and or if they don't, they just provide another source of property management. So it's semi passive income, but it's not totally passive. So that's how I started, and through my journeys, and what I did was I purchased several homes that way, um, and I realized that in order to scale that, I couldn't scale really fast. One being during the pandemic, the housing shortage was, as everyone knows, so there's a lot of competition for that. Another one is cash. Because conventionally, when you buy these turnkey companies, you need at least 20% down. So in order for me to scale, I would need a ton of money, and so I pretty much went in the rabbit hole, and I took mentorship of wholesaling from another guy named Todd Dotson, and he introduced me to wholesaling and taught me how to wholesale. And also, at the same time, he also introduced me to creative financing. Um, so, but he didn't go as much as details as Pace does. That said, I went and did some wholesaling, and from the get go, I didn't really like doing that, but I needed to get my feedback, so I did it. I did it for about 4 months or so, and I got my wholesale deal. And in that process, I was able to do wholesale and got most of my money back from that mentorship. So I was happy about that, but I didn't want to continue to do that. So from that, I did a bird deal, which I also learned from him, and uh, I was relatively successful doing that, and I would like to continue to do that. But the issue with that is there's a lot of moving parts there. One being you have to get a really good deal uh, in order to the numbers work out. So that's still my strategy. I'm always looking out for that. Um, and in going on the rabbit hole, that's where I found Pace Morby on YouTube, just doing creative financing, and then I found his free website, and after a few months of just reading through posts and looking at his YouTubes, and I finally decided to join his mentorship. And from his mentorship, I learned a lot about creative financing, and the strategy that I like the most, or the one that I'm doing now, is that I should say I did it. It's a buying a sub two deal. That doesn't necessarily have to be a sub two deal, but that's the strategy I'm going for. It you buy a sub two deal, not and I'm not renting him. I'm finding an end buyer, a person that's wants to live in the house. So that's in this creative financing is called wrap, and these buyers are buyers. They want to buy these homes because in this industry they call them like penalty box buyers, and can't go into all the details why they are in that penalty box. Is one reason is probably they can't get regular financing through the bank. So that's one of the buyers that fits that criteria. So that said, like there's probably hundreds of reasons why they don't go through regular financing, or I just don't know all the answers for that. But that's the strategy I'm working on. So what really that really is, you're creating a note. You're creating a note just like a bank, and you're just financing a 30-year mortgage for this buyer, a wrap buyer, and how I'm able to make money. People are making money. You require a down payment, at least about 10% or so of the purchase price, and if you got a sub two deal, say is an easy number 3%, you will have to charge a higher interest rate for this buyer. Today's market, the average I think it's 7.5 to 8%. So I'm comfortable. If you got a 3% or 4%, I'm comfortable charging 8% on that. Some people charge higher, depending on the buyers, but doubling it about I think is fair. So you make cash flow without being a landlord. So you're essentially becoming a bank.
So there's a ton there we can unpack.
Yeah.
Let's go back to what does sub two mean for people who don't know?
Well, sub two, it really you can go on the rabbit hole of doing that, but it's really just taking over the seller's mortgage. So when you say taking over a seller's mortgage, is the seller's name still will be in their name, but you're making a payment in behalf of them, but you're taking ownership of the property. What it means is you're taking over the deed. So you technically own the property, but the mortgage still stays in the seller's name. And the reason why we're doing this sub two deal is because they have an incredible interest rate. Some people, I heard of some people having a 1.8%, and that just I don't, in at least in my lifetime, I don't think I'm gonna see any of that, anything below 5% probably. So I call it the golden ticket. It's that's where you really buying the asset is the property, but in reality is if you really boil down the interest rate is the asset.
Yeah. So what Peter is saying there is you can't get interest rates like that if you're going to go to a bank these days. What is it these days? I heard it's more than 7% now. If you go to
Yeah,
the bank, even and that's if you qualify, right?
Right. And then you gotta, put down payment down. And I forgot the sub two deals when you're getting these that you're what we call it an entry fee. Like it's if you could think of it as a down payment, a conventional way, you usually have to pay. Now, if you're not a first time home buyer, if you're a first time home buyer, you can probably get away getting 3.5% to 5% on a conventional loan. But if it's not your first time buying, you gotta at least come up with 20%. So that said, you could buy these sub two deals with very little down, it could be as low as 5% of the purchase price. So that's the other attractiveness of buying these sub two deals.
The down payment and the interest rate are usually worse for investors as well. If it's not a residence you're going to live in, you're usually going to have to put down 20%. And oftentimes it's the normal residential interest rate, like plus 1%, something like that for investors. So investors get penalized in all kinds of
Oh
ways,
yeah, yeah, yeah. You're
which is,
absolutely right. Yeah, yeah.
which
Correct.
is, that's a whole separate discussion about whether that's really wise for this to be happening in the economy, because investors really drive the economy. But the reality is that. And so you're able to take over a mortgage subject to, and that's what sub two means, subject to the existing mortgage staying in that person's name. And while the deed transfers to you, so the deed is the ownership of the properties, you claim the ownership in your name now, while the mortgage stays in their name, you're able to just pay that mortgage. Is that correct?
That is correct. Yeah. So
And
if
then,
you're like the easiest way to think about that, I think how pace takes is like you're going to go to grocery store when you pay by credit card, right?
yeah,
And then you get a receipt. Like the deed is like the receipt of the products that you bought at the market. So that's
yeah, it's such a good example because it's an example that pretty much anybody can relate to, even if they've never done a real estate deal. They've all gone to the grocery store, and most of us pay by credit card or debit card or something like that. So, especially a credit card, because then someone else is paying for it, and then you're going to pay them back.
right.
So there's
Right.
debt. There's debt there. It doesn't just come out of your account directly.
Right. Yeah. So yeah, I love that example. That's why I use that example. Like people can relate to that for sure.
Yeah, and while we're on the topic, I know this is not the exact deal that you're going to be telling us about, but what's
Mhm.
another benefit of sub two often is the purchase price that someone can get. Tell us about that. Like how is it beneficial to the seller to be selling on sub two?
Okay, so that's so like let's just give it like a pretty straight number. Like so so I don't have to think about too much. Say the buyer bought like 3 years ago or 2.5 years ago, 100,000 at 3%. And so they're down there and then they need to move like right now. And the market has shifted currently and they're asking say $110,000. Uh, if they sold that on the regular market, on the MLS or when they're listed with an agent for $110,000, they're most likely have to probably write a check. Meaning because you got agent fees and closing costs. So like at best they'll probably be even. Um, so when as an investor you come in and you ask the seller to buy these subject deals and you can offer them some kind of money, and so there's advantage of that. And I think most buyers would rather just sell it to in the regular market and be done with it. But and the reason why the sellers are open to this is because they've been on the market for 30 plus days and they weren't able to sell for the $110,000. That's why they're open to this. They need to sell the house or move, uh, and like I'll give you an example, like a person in the military that had a VA loan. Uh, they probably put 0% down, so they're most likely they don't have any equity in the house, but they need to relocate because their job required to relocate. So they already probably moved already, so they probably have two mortgages or two payments. I mean, if they move to somewhere else, they probably either have to rent or buy another house. So they don't want to keep paying two mortgages. So that's the advantage of like you're taking over because the market told them that they can't sell that house for that $110,000. So that's the reason why a lot of sellers are willing to listen to this subject too.
Yeah, so they often will sell or they set a selling price at a sufficiently high level where they wouldn't lose money, or they'd lose some money, but they try to minimize how much they lose. And
Right.
because of that price level, it makes sense for them, but then the market might reject it and say, we're not going to, people may not want to put an offer at that price level. And so then they're in a position where they're going to lose a lot of money. Whereas the subject to investor, the subject to buyer says, hey, you can actually just walk away from your property I'll just take over the payments, and it maybe so in some cases even just give them some cash for
Yeah.
doing the deal, so that instead of losing money, they actually make a little bit of money, and they can walk away from the property, and it's very clean. So those are amazing benefits for the sellers, and many people don't know about that. So when you're looking to create a win-win like that, you mentioned a deal to me that we're going to talk about here today, and it's something called a wrap deal. Tell us about this deal. How did you find it? What were you looking for? What's the whole story behind it?
So I'll be very specific. So I am in several markets, but this deal specifically I did it in Memphis, Tennessee, and how I do some agent outreach, which I mean I call agents and try to get deals like this. But this deal was brought from another wholesaler, another investor, and I was able to buy it that way. And my intention of this bought initially was to just rent it out as a long-term tenant. But I own several properties there, and I just didn't feel like this property is the right property for the long-term tenant. So what I did is I found a buyer, a homesteader that wants to live in this house, not another investor or another renter. They want to live in there. So they were I advertised exactly like the whole purchase price, the interest rate, and the down payment they need to come up, and some criteria like they need to prove that they have a job and they're able to pay the mortgage. So those are the only criteria that I'm looking for when I vet a home buyer or a homesteader. And that's pretty much it. And I just make monthly payments to me, and I pay down the mortgages with that money, and the leftover it is my cash flow.
What got you looking in the Memphis market? Because you're here in Southern California.
Mm-hmm. Well, that's where I started. I started it with my turnkey copy was in Memphis, and the reason why I did there, I have people boots on the ground like that I work with. They don't work for me, but we work together, so it makes it a lot easier for me to do it in that market because I have people that I can rely on.
How did you gain those contacts in Memphis?
So the for this specifically rap buyer, I actually found him through Sub Two community.
Oh,
Yeah.
was it someone in the community or someone referred by a community member?
Uh, no, just it wasn't referred. We I just trying to find, and I was just networking with people, and I found out this person lives in Memphis, so that's why I reached out, and he happens to do this a lot too. He helps other investors find end buyers or wrap buyers, so it was a perfect fit.
Oh, wow, that's a cool specialty.
Yeah,
So tell the audience, what does rap mean? What are we talking about when we say that? We're not talking about like Snoop Dogg, right?
yeah, not rapping, no.
I went to Snoop Dogg's high school here in Long Beach, but we're not talking about that.
Okay. So this wrap is okay. So you buy a sub two property. Okay, let's just keep it a very simple number again, like 100,000 and a 3% APR, and say the mortgage there's left 28 years, and the buyer, the wrap buyer, you're marketing it a little higher than what you purchased for. So say you bought it for 100, you gotta probably sell it for about 110,000, and the APR has to be higher than 3%. It could be anywhere from 6 to 8%. So that's where you can make the cash flow. So that's and also I'm sorry I forgot you need to get a down payment because when you buy a sub two property, there's cost to it. Even if you gave zero to the agent or which never happens, but if you gave zero money to the seller and they just walked away, there's still costs associated purchasing because there's title search, title insurance, and then the closing costs. And then if there's an agent involved, there's their agent's commission. So you want to get some money down payment to recoup a lot of the money that you put in as down payment to purchase a sub two.
Without getting into any details of specific numbers you don't want to share, what kinds of costs did you have to incur for this property? Did you have to incur repair costs? Did you have to incur title search, title insurance? And what are some of those things? Because not everyone's familiar with what does title search mean? What does title insurance mean?
Uh, so title search is just to make sure there's no liens on the property or the person that owns the property. And title insurance is you're getting an insurance just in case the title company missed something, say they missed a lien against us, like a solar or something, and that comes back and it puts a lien on you because you're the property owner now. That title search, that title insurance covers that. They'll pay for it, not you.
So
Yes.
the title insurance is covering mistakes that a title company might have made in doing a title search.
Correct. Yes.
Okay.
Yeah.
That's
But
really good to know.
yeah.
What are some of the other components of an entry fee that you had to incur?
So there's always transaction coordinator that's going to be involved. That ranges from from 1,000 to 1,500. Every property is different because all the sellers are different. So all the negotiation and stuff, the numbers all different. So there's that transaction coordinator that you need. You have the title company cost, the closing cost. So the title search, the title insurance, and their services for doing all that work. So that's another cost. And for my situation, because I didn't find the buyer for this property that I'm wrapping, I have to give this person that helped me find the buyer's commission. So that's another cost. And the one that I give you example that what I had to pay an assignment fee for the person that brought me the sub two deal too.
Ah,
So
of
there's
all,
that cost too. Yeah.
of all those fees, well, which one was the biggest fee that you had to pay?
The assignment fee is
The
the
assignment
biggest.
fee, okay, to buy the
Yeah.
property.
Yeah.
And then to sell the property, was that a big fee as well? To find
Selling
that
fee.
person to find a buyer?
So no, that wasn't that much. I paid him $3,000.
Okay.
It's still quite a bit. It's not that much, but it is. Uh, but how this deal is structured is this is also needs to be a buyer, a wrap buyer has to close on a title company. So that there's cost to that, but this is all negotiable. But I was able to negotiate that the buyer pays for the closing cost. So the entry fee of purchasing a sub two deal, it could vary from anywhere from 5 to like 20% to the purchase price. But that said, I would never pay 20% entry fee because then in that way you could just go into the regular market and buy unconventionally. So I'm always looking probably below 10%. And also the APR, what I'm looking is around 4% or lower. So those are the costs of buying a sub two, about 10%. If you could just keep that in mind, is just 10% is probably the good number. When you're wrapping it, the cost is really it's negotiable. Everyone's varies. If you're doing all the work, there might be no cost of wrapping it to you. It's just your time. But for me, because it's out of state, I need a person down, boots on the ground to show the property. And also, this particular buyer, it was very more comfortable speaking in Spanish, and I don't speak Spanish very good. So a person that was helping me in Memphis, he speaks Spanish fluently, so he's able to explain all the processes and how this process works in Spanish. So they're much more comfortable, and I think there's more trust that way. So I'm glad to help pay his fee to find me buyers and walking through all the process.
So the same person that you paid the $3,000 to in the community, that person
Mm-hmm.
actually helps show the property and communicate to people in Spanish and all of that.
Yeah, and it coordinates all like the, like with the title company too, and he helps me with that because he's in communication with with the buyer the whole time. He's telling
Oh,
you got to show up to title company with put your earnest money down, and this day you got to show up and with your husband and wife and sign the documents, all those processes. So and also because the contract is in English, he's able to translate all the information what's on the contract, and so that's really helpful to the buyer at least. It is really helpful.
that's hugely helpful.
Yeah.
And what I've recently learned, and you helped me learn this, is that nationwide, many people who cannot qualify for mortgages who are otherwise known as penalty box buyers because banks sort of penalize them and not qualifying them for mortgages, and then they have to go find some other creative way to buy a home if they want to buy a house if they want to have one. They are often Spanish speakers, and that's very common across the entire United States. Some people might say, oh, in Southern California, it makes sense. You're bordering on Mexico, or in Texas, that
Yeah.
makes sense. You're also bordering on Mexico, but we're talking about Memphis.
Memphis, right?
And there's all kinds of other cities across the US where I'm hearing about this. And I hear that culturally, many Spanish speakers hear about this strategy from other people in their community, their family members, friends, because they also have bought property that way. So they say, hey, there's this other way to buy a property where the person who owns the property will, they may not know this term, but seller finance this to you. They will become the bank. They will let you make payments to them instead of you making payments to a bank. And so when you're talking about a wrap, that word wrap, WRAP, is short for wraparound mortgage, meaning that you have a mortgage on the property. In this case, you actually took over someone's existing mortgage. So you bought the property subject to them keeping that mortgage in place, right? And then you sort of wrapped around it. That's the terminology, meaning you became the bank, so to speak, by offering your own terms to someone who wanted to buy that property from you, such that what you owed every month on the property is less than what that buyer is paying you. So you're making the spread in between, right?
That's correct. Yes, that's correct. Yeah. The hit on the nail. Yeah.
Just so people understand, because I didn't know what any of the stuff meant when I first learned about it or first heard about it. And I thought, yeah, what is that wrap? I mean, it sounds kind of interesting, and
Yeah.
it's amazing. Like none of us, or so few of us, have come across these strategies, even though they're being used thousands of times, probably every week across the U.S. There's probably thousands of these transactions.
Right. Right. Yeah. And it's been done for a long, long time too. So we just didn't know about it.
Yeah, and totally legal. I mean, there's lawyers
Okay.
across the
Yeah.
entire United States who can vouch
Yeah.
for it. I mean, these are real estate specialists, et cetera. And these strategies have been in use for decades. Peter, why did you do a wrap instead of some other strategy like a lease option or just straight renting the property to somebody or flipping the property to somebody? There's a number of other things you could have done with that property. Why did you do a wrap?
One is if I flip this property, I couldn't make money. I'll probably lose money. So that's number one. Uh, Two is I the some neighborhoods just, in my personal opinion, doesn't work well as a long-term tenant. You might be able to make money, but in the long run, I think it's just wouldn't work out in my mind because some of these quality tenants that will rent from you, like I'll give you an example. One of the properties that I owned, they just destroyed it. Like you just your jaw would just drop. Like who
Wow.
does this to anyone's property? But anyhow, it does happen more often than not. So that's the reason why I just decided to go this route. And I like to try new things. Like I said, I've done wholesale, I've done bird deal, and this is another thing that I'm trying. And so far, I like doing this. So,
And what is a bird deal? What does that mean?
that's an acronym for buy, renovate, uh, buy, renovate,
Rent,
rent, or refinance and repeat.
refinance and repeat. Yeah, there you go.
Yeah.
Buy, renovate, rent, refinance, repeat.
Right.
Say that
Yes.
fast 5 times. Yeah.
Yeah. Try that. Right.
And Pace, we're talking about Pace Morby. He has his own version of that he calls a SIR deal, which just replaces the B with an S. And all that means is instead of buying conventionally, you're going to buy subject to someone's existing mortgage staying in place. And then you're going to go through the same steps of renovating, renting, refinancing, and then repeating that, but having that advantage of the existing mortgage being in place. So you don't have to go qualify for that mortgage and put down
Oh yeah,
a big down payment and all of that. Even though you probably have entry fee, like entry fee has multiple components, meaning you might have a down payment, you definitely have renovation as part of the strategy. So there's could be still a substantial cost in doing that, right? So it can be a lot slower to start cash flowing on that. Is
that's
that
correct.
is that the downside? Is that accurate?
Uh, so I got a little bit lost. But like, what was exactly the question? Sorry.
I was just looking to clarify. Is that a downside of the Burr strategy where you kind of weighed those downsides and said, you know what, I want to do a wrap instead? Because a wrap, instead of you owning it and renting it to someone and having the property potentially trashed like you did in another
Hmm.
property deal that you did, you're able to sell it to someone so they take ownership and anything that happens to the property is on them.
Correct. Correct. That is correct. Yeah, you're not you're essentially the bank. So, you have nothing to do with the property. If anything happens with the property, they have to fix it. Like if a tree came down and broke their house or came off on the roof, they have to repair that. That's their home.
What
So,
happens if they stop making payments to you? Because you're still involved in this, right? You're the bank,
oh
meaning
right,
so
right.
to speak, you're the bank, meaning they owe the payments to you. What if they just stop making payments to you?
So that so there in the contracts is if they're late about 3 months, you can foreclose on them just like a bank.
So you can foreclose. How hard is it in Tennessee? Not maybe just putting you on the spot, but I'm wondering because I've heard in different states it can be much easier or much harder relative to other states to go through a
Yeah.
whole foreclosure process and can get expensive as well.
Well, I had never done one, so but that says what my understanding is. In after 3 months, you can file the foreclosure process in the court system, and it could be done as fast as 30 days. And you know you got to get police involved and stuff, but you got to do everything legally. And so you could be done in 30 days. It could probably take up to 6 months. So
Yeah, I'd imagine it's a state like California. It probably would take longer than
yeah.
30 days, but that's part of.
California, you could take years sometimes. So
Oh wow,
yeah,
it's. I've heard stories. I've thankfully
yeah,
not been through that, but and don't want to.
right, right.
Tell us what were the hardest parts of this deal from start to finish.
Hardest part is I finding the deal is one of is tough because you there's not a lot of them out there that are very good deals. Meaning like there are a lot of deals that have high interest rate or has a high entry point, and they could work, but it doesn't work for me. So that's one of them. The I mean, I only can give you this example because I only done one. So the and I think I got a little bit lucky finding the right person to find the buyers and stuff. So there wasn't that much struggle, but it was the paperwork because I haven't done that in a while. So I haven't done it before. So that was one of the struggles for sure. The paperwork, making sure that everything looked right. Even though a transaction coordinator did it, I had to coordinate with the title company to make sure that the title company feels comfortable with the contract too. So those are those struggles that I went through. But I am much better now, but I'm sure there's other stuff that will come up when my next one I do. Uh, and coordinating with the buyer, and that's another lot of moving parts there too, because they have a life too. So that's that's another struggle that I and there was stuff that I learned through this process for sure. And but I think is the paperwork was the probably the hardest for me at least to understand what the paperwork meant, and so. But after the first one, I think it's much easier. It's just probably because it's my first one.
Your first rap deal, you mean?
The rap deal, yes, right.
What would you do differently? Sounds like you got amazing experience through this. What would you change if you had to do it again?
Well, if I had to change anything, that's a good
Not
question.
that you have to, but would you?
Yeah. Oh, I'm sure there's a lot of more improvements that I could have done and a lot of mistakes. I probably would have put a deadline for the and for the buyer to commit, because they did commit and they put the EMD down, which is the earnest money. Uh, but they had their own issues, is probably because, but also I didn't put enough contracts, meaning like, we need to close by this date. And because the reason why I say that is there's holding costs. So I still have to pay, the property taxes and the insurance on it, and the mortgage on it. So it took about 2.5 months or so. So there's those holding costs that I came out of my pocket without uh, having any income coming through. So I'll make clear contracts. I think that's the number one thing I'll probably redo. I just make sure that buyers understand that, hey, we need to close this in 30 days, and if you don't, there's some penalties, because at the end of the day, we're all trying to make money, and I lost money in 2 months. So that's probably one thing I would change for sure. Have clear contract
So
with the
the
buyer.
buyer that you eventually sold to, they actually took about 60 days to close.
Yeah, yeah.
What were
And,
some of the
and
delays that happened there?
well, this this as I said before, the buyers, they I can't put words in my mind, but what I think is they don't feel comfortable with the banking. They don't trust the bank, I think. So they actually held the the deposit, the down payment money in physical cash. So they had it under in their house. So, but I don't want to receive cash. So, and the title companies don't. So what they had to do, they had to deposit money in the bank. And one of the issues that came up was that they were depositing, like, I don't know, $1,000 a day or something through an ATM. And I think Bank of America flagged them because they probably thought it was some suspicious activity. So that, they that put a big delay on it, uh, of them coming with the money. So it's partially, it's their fault, but it's also, they just didn't know the process. Neither did I. Now I know that. So I think it would have been way better off if they just went into the cashier and they just deposited the money. And I don't think that would have had any problems. But I think they threw a red flag because they're depositing $1,000 here and there every day. So that's a lesson learned. And but that's one of the delays. And the person that was buying a home, he travels for his work. So the scheduling too. That was one of the issues.
Wow, those are very practical things that I wouldn't have thought of.
Yeah.
Sounds like, and that's the kind of thing you learn when you actually do a deal. If someone listening to this was considering doing their first rap deal or was in the middle of one, what other advice would you give to them? Not advice, not legal advice, but
Hi,
just
bro.
friendly suggestions.
Like if I have to change anything, the clear contracts. I think that's very important. Have very clear contracts. Have both parties sign it, and you might still go through the deals, but you just make sure that the other party knows that your intentions, and they understand exactly what the contract says.
So aside from the deadline, maybe more like 30 days, is there anything else that you would change in the contracts?
Uh, no, that's no. I think that's pretty much it. I think the deadline, and understanding we have a deadline to do, and if we don't meet the deadline, the contract could be voided or there's penalties to it. So I think that's the only things I would add to that contract.
Good to know. And what kind of deals are you looking for these days, Peter?
The same type of deals. I'm just looking for really low equity sellers that are selling and have very low interest rates that they locked up for 30 years or at least has 20 plus years left.
I think there's going to be a bunch of those because many people bought at the peak of the market, and the market's starting to drift down in many places around the country. And for those people who are not able to stay where they are and they need to move or want to move for whatever reason, they're going to be in a lost situation if they do that selling through a normal agent, right?
Right, correct. Yes, I believe so. Yeah.
If somebody has a deal like that, or somebody knows someone who has a deal like that, how can people contact you?
The best way is probably just message me through Messenger or Facebook or probably Instagram is probably the easiest to find me. It's Peter JYIM is just the handle, and that's just my handle for all the platforms. So you can probably find me.
Oh, nice. So
Yeah.
you got a uniform handle on all the different properties. So
Yes.
Instagram, Facebook, and I see
Yeah.
your
My
phone number on
email
the screen
address.
here. So
Oh yeah. You're right. Yeah, that's right. Yeah.
is that okay for people to contact you that way as well?
Yeah. Absolutely. Yes.
All right. Is there anything else you'd like to say before we pause here and have you back another time, maybe?
No. Yeah, I'd love to do it. Another podcast with you. When I have another deal that I finished.
I really acknowledge you for being one of the most giving people in sub two. There's a lot of giving people in the sub two community, and you are someone that really made a difference for me because you reached out to me, and it's just great to know you and to hear your stories of how you've done these deals because many of us are still on that path of doing our first deal or we're just newer in the game, and there's just so many nuances to every deal, and so every deal, no matter how many wrap deals you've done as well, every deal is going to be a little bit different. You can learn from that. So yeah, it would be awesome to have you back on here sharing about other deals you're doing. For now, Peter, thanks so much for being on Real Estate Deals. Let's all go out there and find some real estate deals that we can do and learn from.
All right, appreciate it, son.